Richard Southern joins us now on this beautiful Wednesday.
Yeah,
Wednesday.
it's hump day. We've broken the back of the week, Tina. We're almost there.
Almost there. All right, Richard, good news for drivers on the way. You'll want to wait till midnight to fill up your tank.
Good news, Tina. We're going down. Price is going down tonight.
That is good news for drivers.
5 pennies we're going down
Wow.
tonight. Not too bad. It'll bring the average at most GTA stations to $1.59.9 a liter. Not too bad considering on this day a year ago we were paying a little over $2.
Those
Tina.
were not fun times.
No, they were not. Here's the story. Oil prices have been falling a lot this week amid concerns about a potential recession, worries about interest rates going up, bank failures in the United States, China's uneven recovery, all pressuring oil. It's down to $68. Analysts think oil could stay around the $70, $80 range for the next couple of months, which is good for drivers, not great for the Toronto stock market because it tends to go a bit lower with the price of oil. But there you go. If you can wait for a fill-up, do so and you'll save a few dollars, Tina.
These gas price stories confuse me. So last week we were reporting how high they were.
I know.
And this week, anyways,
It's a
it's
yo-yo.
confusing. Fun fact I just learned about Richard Southern, he doesn't drive.
Don't drive. You wouldn't trust me on the roads anyways, though, would you?
Probably not, you're right. All right, the odds of a Bank of Canada rate hike is going up after stronger than expected economic growth.
We got a look at GDP today, Canadian economic output, how much goods and services are trading hands. The results were encouraging. Canada's GDP grew at a 3.1% clip in the first 3 months of the year, way better than expected. The economy is actually doing not too bad, Tina, so that's good. The downside here is that it will likely allow the Bank of Canada to hike interest rates again. Maybe
Justify it, yeah.
Well, yeah, the economy's strong enough. They still want to get inflation under control. There's a rate decision next week, the market pricing in a 40% chance of another interest rate hike, which we know causes variable rate mortgages to go up. Your car loan, anything tied to a prime lending rate's going to go up. So could be more trouble on the way next week. We'll keep an eye on it.
I know too many people that have been affected by this in a really negative way. So, yeah, we'll see. All right, some concerning info coming from Stats Canada today. Less fresh produce was available to Canadians in 2022 than previous years.
You eating your fruits and veggies?
I try to.
Yeah, me too. It's expensive, though.
It's so expensive, like just strawberries now, any berries. It's a lot.
The produce section, one of the most expensive sections of the grocery store. This was one of the reasons Stats Canada highlighted as a factor in Canadians eating fewer fruits and vegetables, the availability of which they say were lower last year due to a number of factors. Price certainly one of them. Labor shortages, supply chain disruptions another. Food inflation continues to outpace headline inflation in Canada, and yes, fruits and veggies kind of at the top of the list. Extreme weather, the war in Ukraine, energy costs, all factors. It's not cheap to eat healthy. This is the big problem, right?
Yeah, and it has been a problem for a long time, but it just seems like those prices have really skyrocketed lately.